Okay, are we live? Hold on, let me check some things. Okay, we're live. So what we're gonna do is I've been doing swing trading with stocks for a few years now. Been successful with it in the last year, and some of my friends have been asking me how they can do the same thing. So what I'm gonna do is go over start this channel and see what people are looking for, so you guys can see how it is to do swing trading. If you're interested using the stock market, I'll be using live trading accounts, so you can follow along, see all the mistakes I make, and see all the profits, just so you know what's possible. I'll point out to you and the tools that I use. I don't use any newsletters or signal services. Once you learn how to do this, you can find your own signals, and so you don't have to pay hundreds of dollars that people charge you per month just to get their service signals. So let's start off with some rules to live by, and then we'll jump right into my some current examples. Okay. So swing trading rules to live by. These are, I just put this together quickly. There may be other rules that I may add to this later. Rule number one: the trend is your friend. Never trade against the trend, and I'll show you later how you can pick up the trend. When you're in a swing trade, you're only in it for about 1 to 3 weeks per swing. So don't go against a trend, because that can go against you pretty quickly. And then number two, this is a biggie, because we are assuming that the public already knows which stocks are strong and which stocks are weak, and we are just following the herd. I'm not doing fundamental analysis for each of the stocks that I buy, but I just follow wherever the big players are at. If they're all buying one stock, I jump in, ride that swing up to the top, and then I get off, let it fall back down. Same thing, when it falls back down, I jump on the weak stocks and ride it down. I don't jump on the strong stocks. So I always go long only with strong stocks, go short only with weak stocks. I use stockcharts.com to do my charting. It's a very good tool. I've tried a number of different ones, but this is the best one. I can make my remarks, draw in my trend lines, and save it and check it twice a day. And also the SCTR, which is a score that stockcharts.com have, just shows the popularity of the stocks, and that help guide me on finding which ones are strong, which ones are weak, and which direction to play. Okay, rule number three: use price action and technical analysis to time the entries and exits. These are areas that you should read up on. I read a few books on price action, a few books on technical analysis, and I use that to find my signals. Swing trading is about 7 to 30 days each swing. You should be happy to catch middle 1/3 of each swing, because the first front of the swing you don't want to jump into early. You want to wait for confirmation, so you lose a part of the swing already. And then towards the end of the swing, either you made enough, you should get out before things turn around. So that's the last third that you lose. Or you ride it all the way to the end, and then it stops dropping, so you lose some of your earnings back. So you lose that last third. So just be happy with 1/3 of the middle of the swing. And so I start thinking about closing out a trade when the return of investment is about 50%. And then, for some of you, if you're not doing options or swing trading, you think 50% return on investment is super. I mean, mutual funds, if they do 10% a year, is good. This one we're looking at 50% per trade of how much you invest, and how much you actually get out of it. But it's you're not going to make 50% on every trade. You're going to lose some trade, and some trade you're going to lose 100%. So the average is not going to be 50%. But if you earn 50%, be happy of a trade, and think about exiting at that time, because it's a swing trade. You swing up, it will swing back down. So get out Okay. Rule number 6, I sell. This is my own, after trying different vehicles. This is what I end up using, and I can explain this further later on. But I sell options. I don't buy them, because if you're familiar with options, there's a time decay. The longer you hold, the more money you lose if you buy it. If you sell it, the longer you hold, the time decay actually works with you, because you're selling it first at the and you receive the money, and then later you have to buy it back, so you want to buy it cheaper. um, I sell options, and I do vertical spread, because they're protected. It's not aggressive like naked options. Are very aggressive, but you can't sell naked options in your IRA. And also, if you're naked on your trade and it goes against you, you can lose a lot of money. So this just has built-in protection, and it's aggressive enough for you to make 50% on your trade in a week. Okay, I use this to either go bullish or go bearish, and then I usually do expiration about 30 days out. So these are the reasons I'm using vertical option spreads. You always know your maximum gain or loss at the beginning of the trade. So this is just money management here. Options also give you the leverage for larger gains than doing the stocks themselves. Selling options lets time decay work for you, not against you. And last 30 days of the auction expiration have a faster time decay to help you and works for you. And since you're not planning on being in it for more than 30 days, I choose about the last 30 days of the options time frame. I mean the contract time frame. And then also, you don't tie up a lot of money for margin requirements. That's the other advantage of using a spread. If you go naked and you sell a share, your margin management will be very high, and so you're limited to how many trades you can do. If you do it this way, your margin is only you only tie up about a few $100s for each trade, and so you can do a lot of trades. Okay. And then number 7, rule number 7, I tend to go for stocks that have a value of more than $50 per share. That way, when you sell, your credit that you get is sizable. I want to get at least $100 credit for a share. It just makes it worthwhile for you, and you have to, because you have to pay transaction fees too. You don't want to go a swing for $40-50, and then you spend a week or a month on it, and then you have to subtract your transaction fee. You end up with $10, $15. It's almost not worth your time. Okay. So with those rules in mind, we will come back to this, and I'll point it out again later. But let's go ahead and jump in and see some of my live trades to give you an idea, see if you can do this for yourself. First, let's see, let's refresh this page. This is live. We are on December 22nd, 2014. Stock market in the US is going up. This is the end of the trading day. Europe, I do look at the whole world. Europe is up also, but Asia is kind of borderline up. So now we're going to go into the live trades. I'm opening up stockcharts.com, and this is where I have my account. As I mentioned earlier, this is great. You see how I can do all my charting. You can see everything recorded, check back with it. If I go to my members here, actually, market every day before I trade, I read the market message. You get a nice summary from from Arthur Hill. He writes a summary of the stock market, what's up, what's down, and then he shows you his chart. These are head and shoulder, which is a bullish signal, and he points out which one just is a new high here. So this one looks very bullish. He draws in the supports for you. This will all become more familiar with you once you know technical analysis. This is all technical analysis here. Okay, so now we'll go look at my list. Go under members, your chart list. You have all these scans that I do use to add stocks to my list. And there you are. I have my some IRA list, swing option list. These are to wait. These are the weak stocks. These are the SCTR 70 is the strong stocks. And then my swing list where you have I have two strategies here. The B is too complicated. I'm not going to be able to explain that to you, but the A are the simple ones. We'll go here. I have 16 trades on there. We'll take a look at that. So now we're in. Let's go over this a little bit. This is Home Depot. I bought it here, and this is the chart, the graph. This is the SCTR, which is yeah. Let's go over some of my signal, my technical indicators here. You won't understand everything right away, but as we go on, it will become more clear. This to me is very important. This is what tells me which stocks are strong and which stocks are weak. You can look at this as a percentile, like this is the popularity contest. Okay, these stocks are all in one school. This one, Home Depot, his popularity is 94%. So that means in 100 kids, he's more popular than 94 of them. Okay, so anything above 70 is a strong stock. So when I go high, when the market is strong and I want to go long, I pick stocks that are in the 70 and above. So, and then this is anything that's in here will be considered price action, watching these things go up and down, and you would look for signals like head and shoulders and hammers, engulfing lines. Those are considered price action signals, and I'll show you what they are when we see them. Also the volume, everything down here, these are technical analysis. Everybody does it differently. I just want to show you what I use. You can get very confused and complicated if you use the wrong combination of things. I do like MFI, money flow index. This is the big trend that you're gonna see. If it goes up, I don't go against it. If it goes down, I don't go against it. This one's going sideways, but it's staying above the 50 line, the 60 line. So this is maintaining a strong trend, and you can see, yes, strong trend is maintained. It now price is always going up. CCI is also up and down. If it's up here in the green, it's overbought. If it's down here, it's oversold. So if I want to go up, I usually buy it down here, go up. Also, this one, stochastics, they flip flop a lot more, and this is perfect for swing trading, because usually when I swing is to buy the bottom, go up to the top here, and then I get out. Okay, or I sell here and I go down here and I get out. But you can see this one swings a lot more times than this guy. This guy is just kind of hanging around up here. So this is very important for swing trading, the slow stochastics. When this thing crosses, I'm ready to go up. The MACD also is a very strong signal when it crosses the middle, the zero here. So if you kind of look back here, it crossed, and you go straight back up. What happened when it crossed? Boom, price jumped. Okay, go back here. When this crossed down, let's see what happens. Oh, it jumped down a little bit. Go back here when it crossed up. See, when this one crossed from the bottom, it crossed up. Look what happened to the price. Boom, it jumped. So those are the swings you want to catch. When you get all the three or four of these things lined up, that's when you go in. Down here is the rune. It's more of a what's dominating. The green is the bullish signal that's dominating right now. It kind of helps me time when I need to get out, or should I hang in there and try to squeeze a little bit more out of it. So now the green is dominating, so the bulls are dominating. So you go up here, the bulls are dominating. So I got into this one. It wasn't a pure swing trade where things were in the overbought. I usually buy, like I said, I usually buy like right here, go up here, sell it. But oops, let me go back. But in this case, it wasn't gonna go down. I can see this is not going down, and it was so bullish that I just went in and I bought. So let's go over how I chart it. Um, this is a bullish vertical spread, which means I bought a put. I mean, I sold a put option. When you sell a put, it's a bullish trade. Um, and so I sold the 100 option of price, and then I bought the 95 as the other side for the protection. So I draw the square in here at 195. And this tells me visually where I want to be. If I hold on to this trade and the price goes up and it expires in this area, I win. I get my full 178. So this is um, my maximum income from this trade. This is my maximum loss. 322 is my maximum loss. My maximum trade income is profit is 178. Okay. And if the price expires up in this area, I get 100. I get to keep my 178. If the price expires down here in the lower area, I lose up to $322. So I bought this one. I draw in the arrow, and then I watch it. It kind of zigzag around a little bit, drop down a little bit. So when it dropped down here, my maximum loss. This is my daily going profit or loss. I started with 20, minus 20, minus 14, and I gained a little bit, and I lost a little bit. So this bottom here is minus 66. I lost. I was losing 66, and then it jumped finally. Price confirms that this is bullish, and right now this trade is earning me $126. I can get out of it because my total risk for this trade is $322. My maximum that I can earn is 178, and I've already earned 126. So I've earned more than 50%. So it's time to look for a sell signal, and I would do that when this momentum starts slowing down, or I see these guys starting to turn the corner and point downward. Okay, so we're staying in this trade. Right now we're doing good, $126 profit. Let's go on to the next one. So this is IBM. IBM, let me see. This one is in the way. I'll go over some old trades on this one and give you an idea. See how easy it is to chart with this stockcharts.com is perfect. So I'll upload it back up, and then some of my changes taking place. I got in this one at the top here. Looks overbought, and if you look at the SCTR, the popularity, this guy was only about the 30, 40, about 40. So it wasn't a very popular stock. So I bought it, and then it waited for it to go down, but it didn't go down very much. This one went, the stochastics went down here, and then it jumped up. Everything jumped up, so I got out. I said, no, this may go against me, and I got out with a loss of $6. So I got pretty much got down at the neutral area. I'm happy to get out of that at that time. But then he wasn't very strong with the uptrend, and it started going down. I didn't catch it going down. I was still unsure if this guy was. Looks like he was trying to go bullish on me, so I stayed out of it. Okay, it's better safe than sorry. And then when this guy went down to, see it dropped a lot down to here. What I did at this point, I bought another bearish trade. This time 160, 165. So I drew it here 165 and 160. So I wanted to end up down in this area. Okay, but it took him a long time. You see, I was negative for a while, most of it, and then it's just bouncing around for 1, 2, 3, 4, 5, 5 weeks. And actually, it looked more bullish than anything. As you can see, these trend lines are actually bullish. So I was kind of nervous that I may actually end up losing with this one, but eventually it did go down. He lost his popularity, went way down, and that's what kept me in the game, because this guy is not a strong stock. So more likely it's going to go down. and it did go down. Boom, right here on December 10th or so, went down to here, and I started going into the green. $60, $180, $210. I sold down there for $210 profit. My maximum risk was 276. So you can see I got about a 80% return of my risk, total risk. Okay, so that's a successful trade here. This one was a small loss. What I did at this point, I added another bear. I thought he may go down a little bit more, so I bought a new one. I didn't join the box on this one, but I still following it. And then what I did is it's retracing a little bit. But so right now I'm negative 180, but you can see this guy is still a weak stock. There's a resistance line coming out here. He may hit that and then drop down. He's hitting a resistance line here. Have you saw it draw the trend line here on the money flow index, the CCI? I think he's going to hit the resistance here. This is all down. Everything's pointing down, so I'm not too worried about this one. I think he will hit resistance and then drop down into the profit area. Okay, this one I tried to close it over here because I saw that it was oversold and it was going to go up, but it failed. I put that F there. I tried to close it out at a profit of the 58, but it failed to close. So I couldn't get out of it. So now it's in a loss. Now I just have to wait for the next downswing. So let's move on to the next one. It may sound like there's too much going on, but if you just follow the video, case after case after case, it's going to be the same thing over and over. Sooner or later, you're going to get it. Okay, so don't worry if you're not getting it right now. Let's look at the next one. Messy chart. This is the Russell 2000, the option for it. You can see I started way back here. So this one, you see how it swung up? It was going to go down. Look over here. First of all, it was not a popular guy. His SCTR was about 30. Below 50, I consider as a weak stock. It's about to go down. I see the money flow was going up, and now it's going to go down. So I got in. This one also oversold. CCI is going down. Stochastics is crossing down. MACD is about to go down. Even RSI is going down. So everything's pointing down. So I got in. I did a bearish trade at the one. I sold the 111 and I bought the 116 of the call. My total possible income was 357. My total possible loss is 143. I bought it here, sold it here. And you see I sold it because it's crossed over to the oversold area of all these indicators. Not this one yet. This one lags. But 3 of them showed oversold. I was happy with my income. Went down to up to 110. When I sold, my profit was 108. So again, my total risk was 143. That's the maximum I can lose with this trade, but I made 108. That is about, let's see, 70-80% return on my total risk. Okay, good enough for me. If I kept that, it would have made more, but I didn't want to hang out here. Like I said, be happy with the middle third. I got about a half of the whole trend on that trade. But then I went on. I did another one. I added another trade here, and within 2 days, 2-3 days, I saw it went back up. So I closed out the profit of 19. I didn't want it to wait for it to go all the way up here and then be at a loss. I didn't know it was going to go down some more, but it did. So 2 profitable trade here. I was watching for volume to this thing is starting to go up. Looks like it's becoming more popular. I was watching volume to confirm it at this point. So I put in my note to self here. But went up to here, and then the SCTR starts coming down. So he's losing popularity again. So I got in overbought. So I got in here. It took a while. It took 1, 2, 3, 4 weeks or a whole month, and then finally dropped. As these things came down, the downswing started, and I got to here. I saw that it hit this support line, and I got out. I got out right before it jumped up, and so my maximum profit for this one was 153. My maximum loss was 147. I closed out with a profit of 85, over 50%. I'm at about 50% of my total risk. Okay, so you can see you can get pretty high return of your investment in this kind of trading. So 3, and then I thought it would go down some more, but it did hit that resistance and it bounced up. And the concerning thing for me at this point is it did jump up higher than its last high, which and his SETR that was sort of looking to trend down looks like it's gonna go back up. So this guy may actually be popular now. So it may have broke this one. So this one may be bullish. Um, so I'm at a loss right now of 134. I'm gonna watch it. If it continues to go up, I'm gonna cut my losses. Um, the volume isn't confirming these are low volume. If it's a high, if it's jumping up with a high volume, that's more concerning. So there's a chance it may turn around and come back down. There's a chance this thing may turn down and come back down. Okay, so I might still make a profit out of this one. Who knows? We'll just have to wait and watch. And next one. IYR, this is real estate investment. Very strong stock. Again, SETR is in the 90s. This is an A student uh, in the 90th percentile. I got in, and then it looked like this money flow was not getting higher. It looks like it's trending down. So I got out. I just chickened out. And right after I got out, it jumped up. But I still got out with $21 profit. Okay, better safe than sorry. I was afraid this guy would drop, and then I would be at a loss. So, but there's more opportunities to come back and get it again. This is Mastercard, where it's very strong, gapped up here, and I bought it here. It did go up to a high profit of 41 at the top. I didn't sell it. I should have, but you can't predict the future. So I was in this top of my box here, profitable, but it dropped, and it was unexpected. But it hit the support line, and it's going back up. So at the most I was negative was 130, but it's come back up. It's only negative 19 now. So if this guy remains a strong stock, and this one may, if this turned up, I may be in profit. But I would also look if this trend line goes up and it hits the ceiling. If this one goes up and hits the ceiling and turns down, I would get out of it for whatever loss I have at that time. Okay. So I would say this what I see, it hasn't finished forming yet, but I call it a head and shoulder, which is a price action signal. This is, if you imagine a person standing, this is his first shoulder, his head, and if this is the second shoulder, the two shoulders are shorter than the head, that's a bearish signal. That means it's going to go down in the future, and that makes sense with these kind of trend lines. So I would get out at the top of the shoulder if I can, before I lose some more money. Okay, coming down. This is Pepsi. It was very strong. There was just no entry point along here. I was waiting. I wanted to get in. I could have gotten here, but I was not awake at that time. I didn't see. I wasn't watching this stock at that time. That would be the perfect entry here because everything was high and it just dipped down, and it's still a popular guy up here in the 80s. But I didn't. I got in here, which I normally don't do because this is overbought, but it was just so strong that I broke my my rule of buying low. So this is what happens when you break your rule. It's all negative, but it's coming back. Usually when a strong stock comes down, hits the support and comes back up, and I'm doing well, I would actually add another trade here to go bull again, because it looks like everything's bouncing off the bottom here. So, but in this case, he's losing popularity. I mean, he's go down to from 90 down to 53. So in this case, don't add a bull. This guy is losing popularity. It may not go up as high as here anymore. He may actually start going down. So um, on this one, the best I can hope for is get out at the next shoulder and just take whatever loss I have. And the next shoulder would be when this thing goes up and turn around. When this thing goes up and turn around, I would get out of this one. Okay, but not right now. I'm negative 92. So you can see there's going to be some wins and some losses, but you have a system like this. I think the odds are in your favor. Procter and Gamble, I got in and I got out. I got in at the bottom here. Stochastics, turning around. Got in here, put in a bull. He was still a popular guy, about 70, and it continues to get higher. And they went up to 92.6 today. I got out of this today profit, which is $46. But my maximum that I can earn was only 76 on this one. So that's about 50, more than 50%. I'm happy with it. I'll get out before it drops down. So, okay, Qualcomm. This one I'm losing. I did win over here. I got in at this one. It wasn't popularity was about 50, so not a strong stock. So I'm looking for bearish signals, and he was overbought here, and things starts coming down. So I got in. It only took a few days. Boom, 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 down here. I waited to see if it would drop some more, but it started bouncing back up, and I got out over here. So my maximum profit was 129 down here, but I got out at 123. Very happy with that trade. Okay, and in this case, my total risk of loss was only 109, so I got out with over 100% of my risk. So very good trade. Not so on the next one. I thought again it would go up and it would go back down, but his popularity is actually increasing. Um, I see a reverse head and shoulders here. It's as if this person hanging upside down. His head is here, his first shoulder here, second shoulder here. So SH2 is a second shoulder. That's usually a bullish signal, and it went bull on me. I should have gotten out down here, but again, I was not awake for some reason. I didn't see that, and so now I'm losing by 60 points. So the best thing I would hope for now is for it to get out at the next low point, or sometimes I just wait out all the way towards the end and then make a decision. My maximum loss would be $154. Okay, next one, QQQ. A stupid mistake again. This was a very popular strong stock in the 93, but I bought it when it was overbought, and so I should have bought it when it's oversold. So again, when it's sometimes you don't think clearly, and you can see why. You do that again, are negative, but it's bouncing back. So now I was down to negative 178, but right now I'm only negative 31. So if this thing bounces, it looks like it's gonna curve down. It's a good idea to get out of this at this time. There'll be a double top here, which is a bearish signal, even though it's a strong stock. I might just wait to see if it touches that. If it goes above this, then I would keep it. But if it touches that drop down, I'll get out of it. Okay. Next, SLB. This is oil equipment. You can see here I got in over here because he was losing popularity, very unpopular, only 30 percentile on the SETR. And you can see here the trend line is being broke. It's going down. So I got it in here. I waited for about a month. Boom, dropped down to here. Got out. Profit $99. Maximum risk was 123. So that's about 2/3, more than that, return of an investment. Okay. And then I got in again, thinking that he's gonna drop because the trend line was still down. Trend line was still down, but actually what it's doing right now, this is an important one. This is how a retracement looks like on a technical analysis. On the stock itself, let's see, where is it? Oh, right here. When it's dropping, and it goes back, that's a retracement. When it goes back to support, and goes to drop, and it goes back to retracement, and it goes back to support, that's a retracement. So I'm expecting this one to go up, hit support, either this line or this line, and then this line is, I drew this in from peak to peak, from this peak to this peak. So it would likely hit one of these guys. He's very unpopular right now because oil is just crashing all over the place. So likely he will go down. So even I'm at a loss of 133, it's okay. I think it will turn out in my favor in the end. Because back to this, a retracement looks like this. It's gonna push down, trend all the way down until its maximum. Takes a deep breath, goes back up, and what it's gonna do is gonna push down again. So just this one bounce versus lots of bounce down and one big bounce up. Just almost like he's out of breath, pushing down. Take one deep breath, and then he's gonna continue pushing down. So I'm gonna watch this. If he bounces this, I'll hold on to it, let it ride down, and hopefully turn this loser into a winner. If he goes up and breaks through all of this, then of course it's a loser. I get out. Okay. Just a few more. Again, this is KRE. I'm very confused on this one. I don't know what I was doing. I thought it was gonna go down, but it ended up being ranging, staying within this 2 range, and popularity is going up. So he was on an uptrend, and then this is a flag pattern. So this is actually a bullish signal. So I'm expecting this guy to pop out of here, and my loss will be even greater. Right now I'm losing $86. If he continue to side range like this in this flag pattern, I would get out at the next bottom. Okay, that's closest to breaking even as I can, because it looks bullish to me. Okay, even though, yeah, see the Arun is showing the bears are starting to take over, the bulls are going down. So it could go down, and if the bears take over, it would bring it down to here, and I would get out with whatever loss I have. So bull flag, get out, and next bottom. My own note to self. That's what I love about this stock charting. You can write all the notes to yourself and save it, and you do everything right here. You don't need anything else. Okay. Well, you need your trading account, which is different. Again, about target here, very popular stock, 94th percentile with the SCTR. I did a bullish trade. Again, I was breaking my rule. I bought it. I bought a stock that's um, overbought, but it went down, and it's coming back up on the technical analysis. Now this looks almost bullish. If this one crosses here, the MACD crosses, it'll be bullish. If this one bounces up here, it'll be bullish. So this may turn out to be pretty good. But now I'm at a break even. It was negative throughout here, and then this little bump in the last few days made it break even for me. So I'm gonna watch it because it may turn bullish on me and turn this into a profit. And then UNP, this was the Union Pacific Railroad that Warren Buffett just invested in and earlier, and now earnings showed is profitable again, so it jumped up here. I got in here. I thought it would jump some more, but again, I broke my rule of buying at the bottom. I bought it when everything is overbought, and then you see how all this negative. So try to stick to the rules, even though you have the rules. Sometimes you just want to be in the market, and you get in at the wrong time. So I had 3 in this example that I jumped in, and it was all downhill from there. But this guy did bounce back up to here. I was negative, and then boof, within this point, this jump, I got out. It was expiring, but I got out with $37. Here's an advantage you can see with the vertical spread. You see that I bought it here. I got in here, and it was a bullish trade, so I'm supposed to be in profit above this box. But when I got out, it wasn't above the box. So it was a bullish trade, but I got in at about 122.5, and I got out at 120. So I got out at a lower price. This would be a loss if it was a straight up trade. But since it was a spread, an option spread, the time decay worked for you, not against you. So what would have been a loss at a straight trade became a profit of $37. So that's one of the reasons I used options. I mean, I sell options because this time decay helped you turn a loser into actually a winner. I got back into this one here um, because this first one expired and I only made $37. I was supposed to make $89, so I bought another one. This one would potentially give me 177, and already I'm $38 in profit for this one. So we'll see. It looks like it broke its downtrend. It's a very popular stock, broke the downtrend. Hopefully this way will go up at least to here or even break through that and bring in my up to $177. Okay, we're almost there. Walgreens. Again, another bull. I got in. These things were crossing, going up, and it's a popular stock. Popularity was going up. Um, so I got in. Right now I am at positive $35 on this one. Again, a strong stock, 95, 95th percentile on the SCTR. I got in, went down a little bit, but trend line is up. It's gonna break the trend line, so maybe I should get out of this one soon. But this is overbought, overbought. I should get out of this one. But right now I'm in profit about 40. This is utilities, an ETF for utilities. So yeah, I would enter a sell at this point because it's losing momentum in every indicator. So yeah, the swing is over. And then this one, retail. This is the ETF for retail. You can see I got in this a few times. I got in here when it was on the bottom of the swing and aiming for the swing upward. Aiming for the swing upward. When it crosses here, it bounces up. You see that? But right about here, I closed. I actually lost $20. I think I got out because this was too neutral. It could have gone down, and this was coming up to these trend lines. I thought it would hit resistance here and drop down. I got out and I took a loss of $20 on this one, um, which is fine. But I mean, if I stayed in, I of course I didn't know how to predict the future, but if I stayed in, this would have been definitely profitable. I could have gotten my whole $78 out of this one. And then, but I did go in with two more bullish trade here when it hit the bottom here. Hit the bottom here, and I look here. Now it's very popular stock that's bottoming out, coming back up. So upswing. I see an upswing coming. I put one in. It did well. All greens. 56 on that. I felt more confident. I doubled down my money. Put in another one, and that one is right now $25. Profitable. Both are doing well. And then I would just wait for this to go up to up. It's getting to overbought already. If this stochastic cross going down, I would get out of it, take both profits. Okay, that's I think that's good enough for now. Leave comments, see if this is helpful for you. See if you want me to explain anything. Leave comments on the bottom, and I'll do more sessions in the future. Hope it helps.